Dashed height inflation hopes spell more pain for shares and bonds. New York blistering inflation is threatening to reignite dual declines in U.S. shares and bonds, leaving buyers with few places to hide from a Federal Reserve that appears headed for its most aggressive policy tightening in a long time. Friday gave a touch of what traders can also see in coming weeks. The benchmark S&P 500 index fell almost 3% while yields at the benchmark 10-year Treasury hit their maximum level in view that early May after stronger than expected inflation information ramped up forecasts for more competitive Fed rate hikes later this year. Bond yields pass inversely to charges. Today, the inflation records was disappointing. Many hopes for a peak are actually dashed, said Ryan Detrick, chief market strategist at LPL Financial, Nasdaq, LPLA. The fears over inflation and the capability impact of income in corporate America are adding to the concerns for buyers right here. Stocks and bonds have fallen in lockstep for most of the year as tighter Fed policy lifted yields and dried up threat urge for food, pummeling buyers who had counted on a mixture of the two belongings to buffer declines in their portfolios. Those moves partially reversed over the previous few weeks on hopes that a ability peak in inflation would permit the Fed to show much less competitive later this 12 months. But with markets now having a bet policymakers will hike fees by as a minimum 50 basis points of their next three meetings, expectancies of a less hawkish Fed are fading and buyers accept as true with greater declines are at the manor. Given that price pressures inside the U.S. show little signal of easing, we doubt that the Fed will take its foot off the brakes anytime quickly, analysts at Capital Economics wrote on Friday. We consequently suspect that more ache is but in keep for U.S. asset markets, with Treasury yields rising in addition and the stock marketplace remaining underneath strain. The S&P is down 18.2% year to date, once more approaching the 20% decline from file highs that many investors don't forget a bear market. Yields on 10-year U.S. authorities bonds, a benchmark for loan quotes and different financial units, have greater than doubled. Phil Orlando, leader fairness market strategist at Federated Hermes NYSE, FHI, has beefed up coins positions inside the portfolios he manages to 6%, the largest allocation he has ever held at the same time as cutting holdings in bonds. In equity markets, he's obese the sectors expected to gain from rising costs, including power. You have a totally difficult image for monetary markets for the next several months, he stated. Investors have to just accept that the consensus view turned into incorrect and inflation is still a problem. Orlando sees fears of stagflation, a duration of slowing growth, and excessive inflation as a key marketplace driver. Overall, 77% of fund managers assume stagflation within the global economy over the subsequent 365 days, the highest degree considering the fact that August 2008, consistent with a survey by means of BofA Global Research taken before Friday's inflation records. Hawkish views Friday's white-hot print, which confirmed customer fees rising 8.6% in May, as pushing a few Wall Street banks to elevate forecasts for the way a lot the Fed will need to hike costs to staunch inflation in coming months, doubtlessly maximizing the pain for buyers. Barclays (LON, BARC) now sees policymakers handing over their first 75 basis point growth in 28 years once they meet next week, even as Goldman Sachs NYSE GS strategists forecast 50 basis point hikes at every of the following three conferences. Prices of Fed price range futures contracts on Friday reflected better than even odds of a 75 basis point price hike with the aid of July, with a 1 in 5 hazard of that occurring next week, up from 0920 earlier than the inflation file. The Fed has already raised rates by means of 75 foundation points this 12 months. FEDWATCH. Meanwhile, few investors assume falling fairness markets to knock the Fed from its inflation-fighting route. A BofA Global Research poll taken before Friday's CPI-wide variety showed that 34% of world bond traders agree with the relevant bank will forget about fairness weakness absolutely, only pausing if markets emerge as dysfunctional. Pramod Atluri, Constant Income Portfolio Manager at Capital Group and Primary Funding Officer on Bond Fund of America (BFA), is among the bond investors who've dialed back. That is a portfolio sensitivity to modifications in hobby charges over the last few weeks. I notion there was a reasonable risk that inflation had peaked at 8.5%, and we'd be on a consistent downward fashion via the relaxation of this year.